Essentially, companies want to be around the same ilk of those companies. For the most part, it differs depending on what industry and what life cycle those companies are in that respective industry. The office space and the layout influences the culture and vice versa, and how it signals to people about the values of that company.
We sat in a lot of front lobbies at the front desk, and looking around the companies, I really felt you could get the vibe of the actual company from just sitting there and observing. And it got me kind of thinking, for you, as someone who's leased out millions of square feet of office, does the company create the space, or does the space create the company?
I love this question because this gets to the heart of everything that we do, and the answer is actually very simple.
All right, Gabe Marans, welcome to the Broker Brunch.
Well, thank you. Great to be here.
Let me start, Gabe, with a quick story of my experience with office. So about 2 years ago, my partner Mitchell and I, we were looking for a new professional home. So we were leaving our company, and I would say we met with every large real estate brokerage in the city. So big companies, small companies, everything. And it struck me because we sat in a lot of front lobbies at the front desk, and looking around the companies, I really felt you could get the vibe of the actual company from just sitting there and observing. So things like, was there an open plan layout? Is there cubicles? What type of art they had on the wall? It just all spoke to what the company was about. And it got me kind of thinking, for you, as someone who's leased out millions of square feet of office, right? Does the company create the space, or does the space create the company?
I love this question because this gets to the heart of everything that we do. And the answer is actually very simple, and that there's a give and take in the relationship between a company and their space. There are some companies that lean a little bit more heavily on the spectrum of the space defines the company, and yet many more, it's more about the companies defining the space. And when you want to think about that on a deeper level, just unpack the reality that is a company changes throughout its life cycle as a company. And so if you think about a classic startup as an example in New York, they might start out in a mid-block building in West Chelsea with one side of light and almost no amenities. And then as they grow and as their recruiting requirements start to elevate and as they progress along the pathway towards IPO or acquisition, you see them start to elevate the experience of their office offering. And it's not a coincidence when you think about the large publicly traded tech companies in New York. They are in Class A buildings. But at one point in their origin, they also started in the proverbial garage that Steve Jobs started Apple in. And so the company defines the space, but the space also has this relationship with the company where it also defines the company. It's a very interesting and complex dynamic.
And I feel like you would never think that being an office broker or a real estate agent, that you have that kind of influence over a company's culture.
It's not something I thought of when I first got into the business, that's for sure. Although almost 20 years ago now, I don't think I had much clarity on anything, just kind of stumbled into the career. But there is absolutely a sense that the space will have an identity impact on the company. And it's exactly what you were saying. There's a certain way that you feel when you visit a certain office building or you walk out of the elevator and walk into someone's space. There's an influence of the interior design. Is there greenery? Is it an open plan? Is it a closed office environment where everybody has their doors shut? Is there glass or sheetrock? All of these things have impacts on how people experience those spaces, and it broadcasts, often very intentionally, the values and the desires that the company wishes to portray.
When did you, in your head, go from that deal-making mentality to more, this is about understanding company culture? If you've been wondering what types of deals we've been working on,
we made it easy for you. Just click on the link, show notes below.
We're talking real deals and real opportunities.
Whether you're an investor or owner or just curious to know what's going on behind the scenes.
Just click the link below and it'll bring you right to all of our available inventory.
It was a pretty early epiphany for me. Certainly when I first started in the business, it was more basic from a transaction orientation. I didn't quite have the level of sophistication where I understood that there was this deeper connection with the space. A space is a space. To be a little crude, you needed space to put butts in seats, and that was essentially it. But over time, I realized, often through the being surprised by clients' decisions and preferences, that there was this deeper relationship. And so it's probably in my first year or two. It's hard for me to pinpoint exactly when, but
20 years is a long time.
20 years is a long time.
Yeah.
A lot has happened in the world in 20 years. Where I'm on tour with a client and we walk out of the building and maybe I misread their body language, maybe I'm just biased by my own expectations, and I expect them to come out and saying, I love this. This is going to be our future home. And instead I hear, wow, this is just a horrible fit. And then they proceed to explain why. And so it was certainly humbling at that point, and I've tried to remain humble and avoid being an editor with my own clients' decisions.
Are there any clients or companies that stand out that they just blew you away when it came to their company or office culture?
There are, although I don't want to play favorites, so I don't want to mention anyone specifically. But it would surprise most of the listeners because it's not the biggest and the flashiest projects. It's often the smallest. And so there are a couple of in mind. One is a relatively small nonprofit that engaged us to help them with their office search in the middle of COVID. It was a period of time when pricing was depressed across the market, and they had this opportunity to, at a relatively low cost, secure space in a very high-end building. And so on our initial space tour, we saw very high-end buildings, like the one I just referenced, and then we saw spaces that were more in line with their aesthetic and their values and their work ethic. Think C+, B- type assets. And at the end of that tour, when we're doing our debrief, I expected them to rank the really nice buildings that they could get for a song at the top of their list. And instead, they picked the C+, B- buildings because, again, it mirrored their values as an organization. And I was surprised to hear that. And it was an example of long-term thinking, an example of, again, what we were talking about a few minutes ago, how the space defines the company and the company defines the space. And if you depart too heavily from that, you can have this miss between the culture and the space itself.
So that's an example of a particular industry, not nonprofit, you said, that was picking a certain type of space. Do you think that certain industries get it more than others when it comes to this kind of stuff?
Each industry gets it in their own right, and it has its own stereotypes for reasons. If you think about high-end hedge funds or private equity funds, mostly concentrated in the high-end Plaza District, I think a casual observer would laugh at why they all need to be near each other. But there's a certain signaling that is involved in any office space for any industry. And if you are bringing in investors or you're trying to recruit portfolio managers or investment professionals, there's a certain category that you need to fit into in order to make that appealing. Now, over the years, as Manhattan has had this experience where classic geographies have dissolved, and downtown tenants have moved to midtown and midtown tenants have moved downtown. That has shuffled a little bit, but the same applies to tech companies, most of whom want to be in the Flatiron neighborhood because that is traditionally in New York City where tech companies were located. And yet if you think about things like the 42nd Street corridor, an area of the city that someone would not be the first to say that's where tech companies should be located. You see Salesforce headquartered in New York City along 42nd Street, Microsoft, TikTok, Adobe, Roku, all of these destination-oriented tech companies, these very large entities that have opted to locate along 42nd Street. And so essentially, companies want to be around the same ilk of those companies for the most part. And it differs depending on what industry and what life cycle those companies are in that respective industry.
I'm going to circle back in a few moments to New York because I really am actually curious to hear your take on New York right now in office. Before we jump onto that, I'm going to just think about office spaces in terms of two things. So one for me would be productivity. and the second would be collaboration. And when I think of my own personal experience of which office worked for each, so we spoke before we came on air about my first commercial real estate brokerage job. So that was with Marcus and Millichap. And at Marcus and Millichap, it's a pure meritocracy. So you go in and it's a large bullpen, and there's young, hungry brokers in the bullpen that are like pounding phones. And around the office then, it's all glass office. So all the senior guys, the top producers, have their own glass office and they're looking out at the bullpen. So it's a savage mentality, because when you're in that bullpen, you can literally look around and see your career progression. And because it's pure meritocracy, if your production falls and you're in one of those offices, you're yanked out of the office in January and you're put into the bullpen, no matter what your tenure is or what age you are. And one of the junior guys who hit a certain production level moves into the office. And you physically watch this. So one thing that struck me about that, although I really loved the grind and the work ethic that was there, on reflection, I think it lacked warmth and it lacked that camaraderie almost, because it was very evident what your value was to the company. And I do think that although that can really promote competition with the right mindset, I think they probably lose a lot as well to that, because folks are different now, right? They want more. They want more of an experience at work. And when I think about, in contrast to that, so that was productivity, but collaboration, I think about B6 Real Estate. And Paul Massey, who runs B6 Real Estate, was almost the antithesis of that. So he was no offices whatsoever. Everybody's in the trenches together. And even Paul himself, 40-year veteran, mayoral candidate, he was sitting in the middle of the bullpen with everybody around him. And no matter how senior you are or whatever, you were just in that zone. And I really feel like we shouted over to each other a lot. You pick someone's brain, things you wouldn't do if you were sitting at home or if they were in an office, because even the thought of going 20 feet over, opening a door, knocking, are you busy? You're probably just going to be like, I'll figure this out myself, or I'll Google it. But isn't the whole idea of office, if we're going to go over the bridge or, in the subways and come in and go to the effort of coming into the office, the whole idea should be to learn, to grow, and to share those experiences.
I think that's a big portion of it. And I think what you just described, the difference between M&M and B6, is a great example, again, of how the office space and the layout influences the culture and vice versa, and how it signals to people about the values of that company. I've only been at one firm my entire career. I interned almost 20 years ago. I'm still here. And it kind of bridges a lot of what you just talked about. So we are a team-based organization. We do not cycle people out based on underperformance within a limited time frame. And so I think that is an important thing that should be addressed, which is you could be a pure meritocracy, but you want to define the time period that you are valuing that merit. And so if you're only looking at it over a 12-month time frame, you lose the warmth that I think people are looking for justifiably in a place of employment. But if you look at it over a much wider time frame, and again, in office space, particularly tenant rep, we're focused on relationships, and we're focused on building those relationships over years and decades. And so it would be doing everyone a disservice if you're grading people only on a 12-month period. And so even our promotional levels are judged based on longer time periods than just a year, because that is the core at which we are viewed as being successful or not in our businesses. And we are a team-based environment, and so we are office-oriented, but we are an office that practices our practice with an open-door policy. And so our teams are distributed across other teams out in the open. I have an office. My door is open 85% of the time. And we are set up with a conference area within those offices. And so we're constantly collaborating. And unless we're talking about something that's particularly sensitive and confidential, the door is open. And so you have this juggling of these different values. And when we have guests come over or clients come over, they immediately pick up on what we hope is a consistent messaging that they've experienced through the conversations with us. And so this balancing between productivity and collaboration is very real. every one of our clients is thinking through that as they design their own respective spaces. And we've come a long way since the model of just offices and the model of just open space. And it's been pretty interesting to see how that pendulum of creativity and interior design has really shifted.
Thanks for listening to the Broker Brunch. We've now brought you a ton of episodes and we hope we're providing a lot of value. If you have any ideas of people you'd like to see on future episodes, please drop it in the comments so we can make it happen. Let's stay on Savills for a moment. So you joined it as right out the gate, right? And it was called Studley at the time?
That's right. Yeah, 2008, I interned there. I was still at NYU. It was called Studley.
Studley. And was it always seen as a tenant office type of brokerage, or did it have, what business lines does it have today versus what it had when you joined in 2008?
Yeah, 2008 was a different world in terms of real estate. It was a world that I think in general brokerage was not as sophisticated as it has become today. It was a tenant rep only firm, and we had some ancillary service lines. But you fast forward almost 20 years, and in addition to tenant rep, we have every service line that you can imagine that would go to support the occupier side of the business. And so that's everything from project management to workplace design. We also have a pretty robust technology platform that allows our clients to better manage their portfolios. We have global occupier services, lease administration, capital markets, and I could go on. And that's just talking specifically about Savills North America. Savills, 40,000 people globally. We have additional service lines all over the globe. We do a lot of landlord representation across the rest of the globe. We do not yet have that at North America, but we have other business lines that are specific to those regions. So, for example, in Scotland, we have an entire business line dedicated to selling castles, which is not a business line that you would ever expect to have in North America. And so it's a pretty nimble platform, a very large company. And it's been an amazing experience to see the Studley become the Savills because we've been able to offer so much more value to our clients.
Office brokers, at least traditionally, as well as I guess all real estate brokers, have a fierce reputation for protecting their Rolodex. Do you see that at Savills today, or was there an old guard at Savills when you joined in '08 that is very different to how things are today?
I'd like to say that the Savills culture has always been collaborative and an open door policy. I never felt like I was being shut out of anything. Most of our business is very collaborative. We do a lot of work with people within the New York office. We do a lot of work with people outside the New York office. And so, in terms of the fiercely protecting the Rolodex, we are a relationship-based business, and I have the faith and the trust of my clients. And my clients have their faith and trust in me. And that stands stronger than anybody else being able to undermine that trust. And so what I always say is take your shot. Feel free to do it. Everybody, when they first get started, they have to start somewhere. But it's how you behave after you take that first shot. Do you try to negative sell? Do you try to make it personal and dirty if you're trying to, outflank me or anybody else on the team? And so oftentimes I'll have emails forwarded to me by my clients on emails that they've received from competitors. And it's always interesting to see. And there is a significant difference in approach, which as I've gotten to know some of these younger competitors, proves out to be true. Some of them are taking an honest shot and then they yield, and others continue to try to punch even when there's not a clear path.
This, I know exactly what you're talking about. So we've all been in that situation, right? And I think this is just such a competitive business. And this is why I think relationships are everything, because there's not much difference a lot of the time between what broker A offers over broker B. But it all comes down to when the deal gets hard or when things don't go according to plan, who do you want to be dealing with? Who do you have the relationship with? And I do think that you're 20 years in the business, I'm 8 years in the business. Year after year, I see that compound, those relationships tighten. And it makes me less and less nervous about competition because there's such a moat up around these relationships I feel that I've built because I've put in the time. And sure, like some clients will come and go, but I have noticed that we're almost flipping the script on clients, and not in an arrogant way, but it's more of like, why are you a good fit for us? Mm-hmm. Because I'm not saying I'm a good fit for everybody. And I think it's a powerful shift in mindset when that happens. And it really has helped us actually win more business, because there's that effect of people want something that's not necessarily readily available.
I think there's a vetting process that goes both ways. Clients or future clients are looking to evaluate you, and you're doing the same thing. There's in every presidential election, there's always some commercial that talks about why the other side's nominee is not prepared for the 3 a.m. phone call.
It's a uniquely American
Uniquely
thing.
American. What happens when so-and-so decides to attack America at 3 o'clock in the morning? Is this person going to be prepared? And the equivalent of that in our real estate world is the Friday night phone call. What happens when you see your phone light up on a late Friday afternoon and you know immediately that it's not good news, because no good news ever hits late on Friday?
Never.
Are you going to be the type of person who's going to prioritize your client's stress and help them work through it, even if it requires you to prioritize that over your weekend? Or are you going to be the one who's going to react negatively, emotionally, ignore the call, essentially not treat that client's stress as your own? Now, everybody could say that they will treat that stress, but unless you've proven it and shown it repeatedly in those situations that are less than ideal, it's still a big question mark. And so we've earned that trust. And in every interaction that we have with our clients, I preach this to everyone on my team: look at it as an opportunity to deepen that trust. Think of it as a metaphor with that escalator. Life is like walking up a downwards escalator. If you do nothing, you're going to end up at the bottom real fast. If you move slowly, you're still going to be going in the wrong direction. You need to be exerting effort and energy and be focused on the destination in order to make it up that downwards moving escalator. And that's the way it is with relationships with clients. You constantly have to be working to deepen further and re-earning and growing that trust.
For your own team at Savills, so what does your current team look like? How do you instill culture in your team? What's important to Gabe Marans in terms of building a team?
Yeah, so right now we're about 7 people, and I like to say that I only hire leaders. What I'm looking to do is constantly scale the things that we're good at. And one of the things that I really enjoy about this business is mentoring. And so when I'm looking to interview and hire, I'm trying to find people that in turn could be great interviewers, mentors, and leaders within the team. And so I am trying to find the next generation of leadership, and that completely changes depending on the age. So you can have someone who just graduated college, that's a fantastic next leader. You can have someone who's in their 30s or 40s, who's the next generation of leader. It's not limited to age. It has everything to do with work ethic. We are a highly ethical and moral group of people. We do not play games. We earn our clients' trust. We never put it at risk. And it's not just with our clients, it's also with the market. Our word is the most important thing. Our reputation is the most important thing. And so if we say that we're going to do something, we are going to do it. Those are the criteria that I'm looking for. Really good people, really strong culture. We enjoy spending time with each other. We enjoy working with each other. And we know, it's not the main motivation, but we know that that's also one of the main points of appeal with our clients, because our clients see it, they sense it, they know that we operate as one consistent machine and group. And the service deliverable that results from that very unique mix of ingredients is superior. And that's where our magic sauce is.
I think your reputation is stellar, and it comes across. You can't fake certain things. And even just watching you on social media or reading your content, you strike me as someone who has very strong ethics, and that seems to be the hallmark of your career, your business, and you've just echoed that in what you've said. So that's coming true. You're obviously walking the walk when it comes to this stuff. I don't think you can do it any other way. You might do 1 or 2 deals, if you're faking it, but I do think 20 years in the business, it can't be done without walking that straight line. So I commend you for that.
Listen, lose the battle, win the war,
right,
is much better than winning the battle and losing the war.
Yeah, there's many battles out there to be fought. When it comes to switching gears, CEOs and bosses. So there's this one line in The Departed, the movie with Jack Nicholson, So he says, I don't want to be a product of my environment. I want my environment to be a product of me. Do you know bosses like that?
One of the nice things about being a tenant rep is that I am often in the room when executives and CEOs are speaking without a filter. Because I'm on the outside looking in. We become a confidant, and so we really see how they operate. And so I've seen shades of bosses and CEOs of all shapes and sizes. We've had our fair share of CEOs and bosses at Savills, and many of them have fit those categories as well. The ones that I find are most successful are the ones that embrace elements of servant leadership. There is this unique balance between leading and being led as a leader. Sometimes as a leader, you have to follow, you have to take your cues, you have to be led. But the hard decisions, the hard moments, the moments when people look to the leader for guidance, those are the moments when you have to make a decision and lead. And sometimes it's uncomfortable, and sometimes the decisions that emanate from that are unpopular. But having the conviction in your decisions while also balancing that with humility and understanding that you don't know all, those are the characteristics that come together to create the best bosses I've ever seen. And you see that because they hire around them superior talent. These types of people somehow attract around them these rock stars, these all-stars that could be standing on their own in any other environment. And yet because of these people, because of the values that they embrace, they're able to attract these peoples around them. And this ties back to the question earlier about how do I run the team, the values that I have. I would love at one point to be considered one of these bosses that embraces all these values that I talk about. And so I'm trying to will myself to that point by hiring people who on their own would stand as rock stars and all stars, but still by their own decision choose to continue to work together as a team.
Thank you for listening to the Broker Brunch. If you enjoy the show, please hit subscribe so we can reach more people. You have to park your ego with this stuff. And I think you've hit on that really well. Do you think there's a mismatch sometimes between, and I'm bringing this back to office space and culture now again. Is there a mismatch between what bosses think their employees want and what employees actually want?
We're coming out of a period where bosses were being led on office decisions, where they would commission these surveys and studies, and unsurprisingly, almost every single one of them reflected an employee desire to work remote more than in the office. And what we've seen over the last 18 to 24 months, and it's accelerated certainly over the last quarter or two, has been this inversion where leaders have realized that the data around return to office, around culture in the office, is never going to lead them to making the decision. And so these bosses have started to make decisions outside the data, using their intuition, using what they think is best for their company, for their culture. And so 100%, we're starting to see leaders now lead in the realm of office space making decisions.
Sometimes things don't show up in data. I think Jeff Bezos said something about that if he has a decision to make, he'd much better prefer to make a decision based off intuition rather than the data. Because sometimes the data just, we're seeing it in polls right now, right? In elections, right? Nobody saw Zoran Mamdani winning, but he won. And I think this happened in the presidential election as well, where people tend not to be maybe totally honest in these polling or data. So I do think a CEO or a boss who understands that is key to actually making good decisions for their company.
Yeah, leadership is a burden, and that burden comes with making certain decisions. But not every decision has to be an authoritative top-down decision. It's knowing when and how and at what level to incorporate the feedback from those around you into making those decisions. But I agree, the visionaries, and a lot of ink has been spilled around Steve Jobs and how many of his most innovative decisions did not come from common sense. They were challenges. He was a challenger, and many of his products have completely reinvented the way we interact with the world. When you are biased and distracted by the data, you end up following. And sometimes there's nothing wrong with that, but true innovation, true leadership happens when you decide to lead.
Did COVID change the dynamic between bosses and their employees in terms of who has the upper hand or more leverage in asking employees to do work?
I'd say that the the unemployment rate had the most to do with where that dynamic and that equilibrium around that dynamic started to settle. Unemployment numbers have started to dip up, and unsurprisingly, that has resulted in bosses having more influence and more power. I think you're starting to see more 4 to 5 day a week mandates by bosses, in part reflecting that. When you had this quiet quitting element in the job market, when you had unemployment at historic lows, when you had the stimulus packages coming out of Washington in the middle of COVID, I think that's when the employees had the most leverage over their bosses. And I think the bosses appropriately recognized that, and they became much more intent on listening and reacting to the needs of their employees. I think that period has passed. I think the best bosses out there continue to listen, but they're not yielding the floor to those employees. They're still operating as the leaders that they have been chosen to be.
You brought up New York a little while ago, and I want to circle back to that. So New York we're blessed in this city, right? We've got so many demand drivers. You got industries from all over the globe, every walk of life. There's industries here and there's people here that want to work in those industries. How does New York office culture compare to other cities around the country? Because I know you do work outside of New York as well.
Yeah, we do global work. We've got active deals right now everywhere from Melbourne, Sydney, through Tokyo, Dubai, all of Europe, South America, and Africa too, as well as all across North America. So I'm a good person to ask this question of, and where New York is number one, and I'll admit that I'm biased, born and raised here in the city. I'm the number one booster for New York. I love this city. I love everything that it's offered and continues to offer. New York has the people. We have the people from a diversity standpoint, and I don't mean that in the most narrowly defined version, but diversity of interests, diversity of place of employment. This is not a city like San Francisco where it's Tech Week and everywhere is branded Tech Week, where you go to San Francisco during Tech Week and it's impossible not to realize that the entire city is geared towards Tech Week. When you come to New York for Tech Week, you don't even know that it's Tech Week, because tech is so far down the chain of command. But when you have it Finance Week, of which there is no thing, you don't know that. The Legal Industry Week, you don't know that. Media, production, nonprofits, I can go on and on. You have such diversity of industry within this city, plus places of higher ed, places like NYU and Columbia, the CUNY system, the Technion, Cornell Tech. This is an incredible thing. And then you've had as a proof statement, major companies that hadn't called New York a home have started to establish New York as their home. Google buying 111 8th about 20 years ago, that was a big statement. Facebook, Meta having a huge dedicated workforce here. Apple, Amazon, and I could go on. And so it's pretty remarkable to see the continued evolution of New York. The city's composition of tenants has shifted almost as much as the skyline. And we haven't even started talking about AI, which is a very real undercurrent here in the city, a very positive undercurrent in the city, and one that we will be benefiting from for many years to come.
When you think about New York City, what are the main office territories that it's split up into?
We talk about 3 major submarkets. So there's Lower Manhattan, or downtown, which is essentially south of Chambers Street. Then we have what's called Midtown South, which is Chambers to about 34th Street. It shifts a little bit around Hudson Yards, but it's safe to say it's around 34th Street. And then there's traditional Midtown, which is north of 34th Street. And in terms of square footage, we're talking about classic Midtown being around 300 million square feet. We're talking about classic Midtown South being around 100 million square feet, and then downtown also being around 100 million square feet. So we're a little bit under 500 million square feet in Manhattan alone.
That's a huge number, 500 million.
Huge number. Put it in context, San Francisco is about 100 million square feet.
So it's 5x San Francisco, and you would think San Francisco is one of the main cities in the world, never mind.
And it is one of the main cities in the world, and yet New York is one of the mainer cities in the world. And so it's pretty remarkable. And by the way, we're not talking about the supporting submarkets of Jersey City and the New Jersey waterfront with Hoboken. We're not talking about Queens and Long Island City. We're not talking about Brooklyn, both Williamsburg, Dumbo, and also Sunset Park, along with downtown Brooklyn. We're not talking about Westchester, which parts of it, including White Plains, really supports the city. And so, and Staten Island we can acknowledge, but there's really no true office product there. And the Bronx, you've started to have some real development, certainly in the South Bronx, but it continues to be a laggard. So New York is a place that is an optimal environment to employ. And that's why so many companies have decided to put down real roots here.
We're back. Another season of the Broker Brunch podcast. Summertime in New York. We've got a lot of exciting conversations coming up. We hope you enjoy listening.
So what's all the fuss about then in the media about office being dead?
I'd like to say that the reporters that have their heads screwed on are not the ones that are reporting those storylines. The ones that are talking about office being dead are either not following New York that closely or choosing to report on other submarkets, because it is categorically wrong.
When it comes to New York in terms of pricing, is there certain corridors right now? How about this? High level, can you talk in terms of like price per square foot for Hudson Yards versus finance versus a lot of companies I know of, construction companies, smaller companies are actually moving to the garment district because the prices are so low. So even if it's not the exact dollar per square foot, like what percentage wise more would you pay for Hudson Yards versus garment district?
One of the brilliant things about this market is this is a market that has spaces that are north of $200 per square foot, and you have spaces that are under $40 a square foot. And so you're talking about essentially a 5x plus spread in the lowest priced product to the highest priced product. The highest priced product is generally going to be focused around new development, so Hudson Yards, One Vanderbilt, but it's also going to be concentrated around the prime territories in the Plaza District. So buildings that overlook Central Park, that house a lot of the high-end financial services and high-end law firms. When you think about Midtown South, which is traditionally an environment with tech companies and other creative companies, that is an environment where also the buildings that are new developments are commanding enormous premiums. But even so, as supply has started to decrease and transaction volume has increased, pricing is up. It is not uncommon to see $100+ rents, even in buildings that were built 100 years ago, but have benefited from enormous renovations. Lower Manhattan historically has traded at a discount compared to the rest of the market. World Trade, all three buildings that are new developments in World Trade on the actual World Trade site. So that's 1, 3, and 4. 7 World Trade is built on terra firma. So even though it has the World Trade address, it is built on the ground as opposed to over the site. That's where pricing is in some instances approaching $100 a foot, but still comfortably in the 70s and 80s depending on the asset. But if you go to like Wall Street, where you don't have view corridors, you can get pretty inexpensive rents in the city, in some instances under $40 a foot. And so that's essentially the spread. The best way to think of it is the newer the building, the more expensive the building. The older the building, the less expensive.
There's a huge range here then. So it seems like there's something for every budget in New York, whether it's the $40 on the lower end all the way up to $200. So
even on one block, yeah, you'll have a $200 building right next to a $40 building.
And that feeds the diversity in the city as well. You mentioned people in New York is what makes New York. That's why.
That's why. I mean, what other city is there where for the same subway fare of just under $3, I think it's $2.90, you could live an hour and a half out in Queens in relatively affordable housing and pay the same amount to commute into the city as the hedge fund CEO who lives on the Upper East Side. And they're both taking the subway to work. It's a remarkable thing, and which is why it's so important for the city to continue to invest in our infrastructure, because it is the great equalizer. Without the city's infrastructure, and I mean the subway system and the busing system, this city will lose its competitive edge.
For New York, there's been a lot of talk of office to resi conversion. Of the 500 million square feet of existing office, are you seeing residential eat away at that 500 million at all? My own opinion on it is that I think it's more of a media soundbite. I think it's a nice thing to say office to resi, that's happening, but the floor plates, the locations, the light and air, it just doesn't seem conducive. At least I'm not seeing it happen in reality. There's always going to be some projects. I think Silverstein have really jumped on it, but it doesn't seem like office will lose much square footage at all to this residential conversion question?
Relative to how much noise there is out there, it's absolutely true that it's not happening at the same level, but it is a significant number in New York City, and it's concentrated in a few different areas of the city. The numbers range from 10 million, 20 million, up to 40 million square feet of current office projects that are being considered for conversion to residential. I think it's safe to say that we're talking about around 20 million square feet of office to residential conversions, and it has to fit a very specific model. It has to be a building that would easily convert to residential. That's typically floor plate sizes of less than 20,000 feet, and it's typically going to be in buildings that require significant investment, and that investment is not best utilized to renovate it for an office standpoint. Those conversions are focused mostly in Lower Manhattan and Third Avenue. So we've seen a lot of buildings along Third Avenue that have been announced to be converted to residential. We're talking about Pfizer's old headquarters. We're talking about Durst 675. We're talking about 767 Third Avenue. We're talking about 845 Third Avenue, Rudin's building. We're talking about 750 Third. These are a lot of buildings that were fully functioning office buildings for a long time, have either sold or the current owners are thinking about converting them to residential, which is having this crazy impact on the market because from a supply standpoint, you take those pieces off the board, all of a sudden now supply is depressed. And then if you're converting those buildings to office, the tenants have to go somewhere. So you're artificially pushing up demand. And so you're starting to see this accelerated leasing activity in the corridors where there's a higher concentration of conversion projects.
Gabe, you've been very generous with your time, but time to take this thing home. So in closing, if there's employees or CEOs out there who are thinking about their workspace, what's the one thing you want them to take away from this conversation?
The office space is a means to an end. It's not an end in and of itself. The workspace should be an expression of the company's culture, of the company's values, but it should also be a place where you give your employees the best way of working. For some companies, that means very heavy in office. Other times it means somewhat lighter. But understanding that the office is not just this isolated physical space that exists in a vacuum and is very much a physical embodiment of the company's culture is everything that a CEO should be thinking of when they start down this path of evaluating their office space.
Love that. You do a 60-second clip feature. How do folks watch that or get in touch with you?
Yeah, so 60 Seconds with Gabe. We're up to episode 131, actually, which is pretty remarkable. Mostly publish it on LinkedIn. I do have a YouTube channel. You can follow me on TikTok, although I don't respond to messages because I try to avoid TikTok. But yeah, anywhere you can. I think I just don't post it on Instagram and Twitter. On those platforms, I'm a long-time listener, first-time caller.
Gabe Marans, thank you very much.
Yeah, thank you, Brian.
Cheers.
Yeah.